Hey everyone, welcome back to the channel. Today we're going to check in with the closing prices of gold and silver for the month of May. And then we'll dabble a bit in the dark arts of candle wick reading and what they might have to tell us about the direction price is heading. Before we begin, none of this is financial advice, as I am not a financial advisor. Creating or updating a portfolio management strategy should never be taken lightly, and without the assistance of an advisor who is familiar with your personal circumstance. With that out of the way, let's jump in. Gold closed May 2024 at just under $2,327 and silver at $30.37 per ounce. They say history doesn't repeat, but it does rhyme. And when it comes to price, one of the beats I like most is wicks on monthly candlesticks. What we're looking at here are the 4 times since the summer of 2020 that gold pushed to local highs and then reversed in a wave of selling. 3 of those times, we saw price fall through the 20-week simple moving and 21-week exponential moving averages. In each of these instances, gold buyers rushed in, anticipating a run to all-time highs, only to become exit liquidity for longer-term holders. However, on the 4th instance, starting in December of 2023, price touched and then bounced off the moving averages. This was different behavior for gold. Instead of stair-stepping to frustrating lows, gold consolidated around the moving averages before launching higher in March of 24. Regular viewers might remember how I've been talking about the importance of checking in with the moving averages, and I think we'll see this happen in June or July, months who traditionally see gold price take a breather from late spring run-ups and the buying in the late summer and early fall. Taken together, I think this is the most reasonable place for time, price, and moving averages to meet once again. Holding the averages here will give us the best chance of exhausting the selling we saw in April and May and allow us to move confidently higher. This brings us to silver, the popular metal who finally wiped the sleep out of its eyes and got moving in May. After ruthlessly chopping up silver stackers in 2023, silver followed gold and started to make moves out of long-term ranges and higher. For silver, this was topping $32 per ounce before pulling back. All told, silver notched an impressive 44.5% advance between March and the end of May. This kind of action is what silver is known for and is entering a seasonally favorable time for prices. As such, I don't see silver taking a rest to consolidate like gold. My bias is for silver to continue its move into the low 30s. And I can't say I'm all that happy about it. The more we see silver move, the rougher the reversal will likely be. Short of an escalation of the war in Europe or tensions in the waters around Taiwan, the near-term driver of precious metal prices will be the movement in the US dollar. While precious metals have done well recently in the face of a churning US dollar, I'm thinking we're nearing an inflection point. The dollar closed May near the monthly lows, and this is bullish for gold and silver. However, I'm not overly confident that the dollar is about to move out of its long-term trading range. Until the dollar moves decisively above 106 or below 101, I think there is a bit of a limit on how far gold and silver will ultimately move, again, in the absence of wider war or a black swan financial event. After the movement in the US dollar, I think the next event to keep an eye out for is a reduction in interest rates. All things being equal, that's looking more and more like a late 24, early 25 event. That's probably good enough for this one. I think gold takes a breather for the next 30 to 60 days. And while silver has woken up and gotten off the couch, it might prove more difficult to keep down, as much as I'd like to see us build some support here in the low 30s. What do you think? Maybe more importantly, what am I missing? Let me know in the comments. If you find value in this kind of precious metals content, please like and subscribe. I greatly appreciate it. Until the next one, cheers.